What's up, guys? Todd here, trading analysis. Free video update. It's Tuesday the 19th. Hope you're well. NASDAQ is at all-time highs. Now, I'm speaking to the Elliott Wave community here, and if you haven't investigated it, you know, it's more of an advanced style of looking at market analysis. And if you don't, agree with it and feel like it's too subjective, show me something that's objective and makes money all the time, and I'll sign up and follow you, right? But there's been a pretty big development here. And last night, I posted something on Twitter, kind of jokingly, deleting the alternate count that we've been tracking so long, which is the bearish wave count. I'm going to show you in this video why it's no longer valid and why I think we're going a lot higher. And that's kind of what I've been saying for a year now, and here we are at all-time highs. So this is the video that I put out last night, jokingly on Twitter. This count's been with us for over a year and a half, but goodbye. And that goes there. See you guys. Okay, so I want to give you a little bit more detail about why it's no longer valid, show you where we are from an Elliott Wave point of view. And listen, I mean, this is super important. I mean, there's no better methodology out there to figure out where you are in the phase of a trend or correction, how much longer you may have to go. Is it perfect? Absolutely not. There's nothing perfect out there. But for me, in my short 20 years of doing this professionally, I found nothing better in terms of a trader's methodology. So let me get into this and show you what I think is happening. Okay, so this was the bearish count that a lot of my colleagues were tracking on the Elliott Wave theory. And they were saying that it's a 5-wave move down and an expanding diagonal. It violated a few of the guidelines out there, which is fine. But if it is 5-wave down, again, a lot of people have respect, and I know really well, have been tracking, the fact that we're now at new all-time highs invalidates that, because there's only 3 Elliott Wave corrections that you need to know. And I just got done teaching this in our options pattern trading course that we're going to complete today, actually, after 10 weeks. But there's only 3 corrections, one of which is the zigzag. And the way the zigzag unfolds is it's 5 down in A, it's 3 up in B, and then another 5 down in C. It's just the simple ABC correction, down up to a lower high and then down to a new low. The key is with the zigzag that the B wave cannot move above the origin or the beginning of A, all right? And the other thing is the other 2 Elliott corrections don't have a 5-wave move down in the initial A. A flat doesn't and a triangle doesn't. The zigzag is the only one. So if, so many people are saying, if this is 5 down and using Elliott, they're calling a significant market crash. Well, all right, if it's been 5 down with the NASDAQ at new highs, this zigzag is not valid. Okay, so that means if it's going to be something a lot more sort of involved, the count that we've been tracking for a long, long time, which led us to be bullish into the lows here, is this. It's a complex correction. It's A, B, C, X, A, B, C. Fine, okay? If that's the case, and again, I'm speaking to the Elliott Wave guys, if that's the case, we have 5 up, we may false break into 17,000 to 17,600, giving us a wave 2 for the 3 reasons I've listed here. Sell in May or sell into May and go away. Realization the Fed may not cut 6 times next year, political instability in the election year. But the blue count, which was our alternate bearish count, which I deleted, a little tongue-in-cheek video on Twitter last night. Well, what if this is not wave 4? What if the correction was not 5 down, as I mentioned, but what if it was on our new blue count here? What if it was just simply A, B, C. Okay, and that would be a simple zigzag, decompose, impulse, and then a small C wave, which is suboptimal, but there's hardly anything perfect in the markets. I think you should know that by now. The point of this video is, and I don't think anyone else is tracking this wave count, if the correction ended here, and this correction in July down to the October low is not a wave 4, but in fact a wave 2, that would require this to be a 5-wave move, which means, is this an expanding leading diagonal? Okay, now that means that you have a 5-wave move. It's a higher degree 1, we're set back in 2. Now, there's something a little odd about it in that wave 5 is longer than 3 and 1. Okay, significantly longer. Well, is it? Okay, so we have known distance of 1, and this is where you use Fibonacci projections. So you just do, a percent distance traveled in 1, you multiply it by, 16.52. 16.52 is there, the 161% of that's up here. So 3 is longer than 1. And then 5 is longer than 3, but it didn't get to a 200% projection of 3v5. So yes, it's long. Is it obnoxious? No. We just got through the 1618 of 5v3. So maybe it is 5 up and a diagonal. This is a wave 2 down. And I'll tell you what, guys, we might be going into wave 3, which is significant. I am not trying to pound the table. I am not a long-only mandated bull. In my money management company, and especially in my research business, I mean, I can be short. In the money management, I could take a bunch of positions off and put hedges on. And I mean, that's the ability, that's the beauty of the structure that I have in the wealth management. So I'm not a mandated, table pounding perma bull. I'm not. I'm a two-way trader, but my job is to report what I see, and I've been doing it all year, and and in 22 as well. I was of the belief that this was a corrective move and we're moving higher, but I'm a little cautious here. But based on that discovery that I just came across last night, we might be starting to ramp in a wave 3 that goes significantly higher. I don't know. I don't have the keys. I don't have a crystal ball. I don't know what the future holds. I'm a two-way trader. I trade what I see. I put my money, my research clients' money, I give them the advice. And then the wealth management clients, I put their money to work in the best of my ability based on what I know, what I see, fully assessing the now. And that's all you can do as a money manager. So watch out. We might be doing wave 3. And I think there's still a lot of bearishness out there. People expecting recession, ton of reasons to be bearish. But if we really are going to squeeze this thing higher and people need to chase, could get interesting. All right. I know that was heavy on the Elliott Wave stuff, but I just wanted to get that out there publicly. And I wish you all the best. Happy trading, happy investing. Talk to you guys soon. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.